CNBC-TV18. Well, let's move on to the Supreme Court action then. They heard the plea seeking waiver of interest for 6 months moratorium on loan repayments ending August 31st. We have Ashmit Kumar who joins us to tell us what the Supreme Court had to say. Ashmit.
Well, for the benefit of our viewers, let's keep in mind that yesterday the RBI had filed its reply to the Supreme Court, whereby they had cautioned the Supreme Court that forcing this interest waiver upon banks would mean that there would be a hit of as much as over 2 lakh crore rupees on the books of these banks. The RBI had cautioned that as far as interest component is concerned, interest on loans, that is a key income source for banks, that reasonable levels of interest margins need to be maintained by these financial institutions to ensure financial stability, to ensure viability of the banks. And more importantly, if this interest waiver is forced through, it would be paid for it. The cost will be borne by the depositors. Their interests will be put in jeopardy. So that is the caution and cautionary note that the RBI had put forward before the Apex Court. However, the Supreme Court not being very impressed with that tone. The Supreme Court noting that the economic health cannot be placed, the issues of economics cannot be placed over the health of people. The Supreme Court noted that these are exceptional circumstances, these are not normal circumstances, that the grant of the moratorium, while not providing for an interest waiver, makes it for a detrimental situation. Now, this was also used by the petitioners in this case. The petitioners argued that this is clearly, the cat is out of the bag. The petitioners argued that the RBI is clearly saying that the profitability of banks is more important than the health of the people in question, the health of the borrowers. So with that, the government, as of right now, clarifying its position that the Finance Ministry is seized of the matter and that it is awaiting consideration in the Finance Ministry and that they will speak no more on the matter till a final view is taken on the case. The Supreme Court's therefore giving the government time to go back to the drawing board, to come back with a cogent reply. June 12th is when the hearing will take place. But clearly, the Apex Court prima facie giving its view that the economics cannot be placed over the health of the borrowers. Back to you.
Okay, Ashmit, thanks so much for that. Well, let's get in Lata Venkatesh for the editor's take on this case. Lata, over to you.
Well, the accusation of the Supreme Court seems to be that the Reserve Bank is protecting banks and not looking at the health of the economy and health of the people. Now, there is nothing like the interest of the banks. Banks are not printing money or creating money out of nowhere. They are intermediate institutions which take money from savers, that is depositors, and pass it on to the borrowers. Whatever money they get by way of interest, they keep a little bit for running their bank and pass it on as interest on savings deposits or on fixed deposits. So if you don't get any money from the borrowers, then they will have to stop paying interest on savings deposits. Now, is that viable and is it even fair? My sense is the court is getting a view that bankers are these huge profiteering people who are becoming rich at the expense of the borrower. Actually, bankers are intermediaries. I mean, you think of any public sector or even for that matter private sector banker, they're just intermediates between savers and borrowers. If you looked at the savers in the form of me, my mother, our maids, our cameramen, why should they lose interest? Why should, the bottom of the pyramid lose interest on their savings? And the borrower, who is usually perhaps a 150 crore company or a 1,000 crore company or a 10,000 crore company, make away with that interest. So if the Reserve Bank is asking them to postpone the interest payment, that is only because in that intermediate period when the moratorium is granted, they have to pay interest on the deposits. So they have to make that money, albeit at a later date. Maybe there is a via media in like not charging interest on interest, perhaps. But to say that no interest will be charged, entirely waived during the period of the moratorium, can bring the entire savings culture to a stop and can also be inherently unfair to a totally unsuspecting population, which could be the bottom of the pyramid savers, extremely poor people compared to the borrowers. I think this point will hit home. The best solution will be if the Depositors Association impledes itself in the case and asks the court why are they being punished so that richer people like the borrowers are being benefited. Then perhaps the health of the economy will be more fairly presented to the court.
Well, interesting point, Lata. Thanks so much for explaining that to us. Well, on that note, let's listen into what veteran banker Uday Kotak has to say on this matter.
The Reserve Bank of India has put in a very clear position from its side, and I think that is absolutely the key. Please keep in mind that banks are intermediaries between depositors' monies and borrowers. So if we have a situation that borrowers get moratorium, banks have an obligation to serve depositors both on principal plus interest. Therefore, we cannot have a one-sided contract where we allow moratoriums on interest to the borrowing side. And of course, banks have a fundamental obligation to pay principal and interest to the depositors. Therefore, it cannot be an unequal game. People who are asking for moratorium on interest, please keep in mind that you also happen to be depositors somewhere. Therefore, do not think about saying moratorium on what I borrow, but I must get my full interest on deposits. If the banks have to serve borrowers, it has a bigger duty to serve depositors. Depositor is the core for the financial system. The trust and confidence of the depositor must be nurtured and protected because that is the foundation of a stable financial system. And I am a believer that the Indian financial system is sound and robust because the Reserve Bank of India has always protected the depositor's interest, which is the core basis and intent of the Banking Regulation Act.
Well, moving on then, in a webinar conducted yesterday, Commerce Minister Piyush Goyal urges developers to cut prices and sell inventory. CNBC-TV18's Jude Sanna joins us to add and put these things into context. Well, Jude, you've spoken to a lot of developers who entered the webinar yesterday. What exactly happened?
Well, the video in question has Union Commerce Minister Piyush Goyal attempting to convince and persuade property developers to quote-unquote cut prices and sell, going on to advise against holding on to inventory and holding on to prices. The minister also goes on to persuade developers that if they were thinking of holding on to prices, hoping for government assistance and selling when markets improve, the markets, he says, aren't improving in a hurry. Now, the webinar in question was organized by Naredco and also featured real estate developers much like Niranjan Hirnani and Supertech MD Mohit Arora in attendance. CNBC TV18 caught up with Mr. Hirnani to get his take on the minister's comments, and he very clearly said that until the government walks the talk by cutting circle rates or ready reckoner rates, real estate developers will not be in a position to reduce prices and sell even if they want to, quite simply because laws and IT laws of India don't quite allow for it. Now, on the aspect of circle rates also, Mr. Piyush Goyal touches upon the topic but stops short of giving developers the assurance that his government will slash ready reckoner rates, going on to state that although he's looking into cutting ready reckoner or circle rates, developers will have to cut prices as much as they can and sell off inventory as quick as possible. Back to you.
Well, we also spoke to the realty sector experts to get a sense of demand and price post-COVID-19. Let's listen in.
I don't see rents going anywhere from a commercial point of view. Any technology-driven company in those destinations with three-digit rents certainly will see some pressure on rental, but otherwise, predominantly across of India, I don't see rent pressure. And demand, I think, for another quarter or two is going to be majorly subdued. Post that, you will see demand come back. So next 3 months, 4 months, you're not going to expect anyways demand. So there's no point crashing prices and saying, come and take a discount. This is not a product that's going to sell at discount.
There will be a drop and things will have to improve. Even today, the sales cycle is not collapsed. Enquiries are still there. I would say that tier 1 developers are selling around 30 to 40% of what they were selling pre-COVID levels. Tier 2 developers are selling around 20 to 25% of pre-COVID levels. May is definitely been better than April.
During the lockdown period as well, we discovered that demand for affordable housing remained pretty strong. There were people still doing the initial booking. I would not say that this is confirmed booking, but initial booking on the affordable housing. So I was quite surprised that there is still that demand on the affordable housing. Luxury was completely off. The last 70 days, there was really very little activity that happened on the luxury space. As the lockdown is opening up, different cities are starting to behave very differently. What we are discovering is Bangalore's really come up. On the other hand, Noida, we have discovered, has been really shattered. And there, the confidence of the buyers is largely, if the construction work and the activity at the site starts, then we will come in and book, and we will then also pay what we have already booked for.
Well, pull up the intraday chart of Tata Power. Now, that stock has spiked up to the high point of the day when the market is down close to around 100 points odd. So we'll slip into a short break. You come back, we'll tell you exactly why the stock is buzzing in today's trading session. Stay with us.